Okay, so this is your video instruction on Part C, which I am not requiring you to do, but I am asking for everyone to watch this video. We'll try and keep it as short as possible. This is what you would have been required to do in Part C. We did it in class, we talked about it, but it was a while ago, so I wanted to give you a refresher before the final exam. So, what you have on the left side of the screen is an adjusted trial balance. This resulted from our Part B. We started with an unadjusted trial balance, then we made our adjustments, we added the two together, and we came up with an adjusted trial balance. So this is your adjusted trial balance, and step one is to prepare your financial statements from the adjusted trial balance. So I already started it over here on the right. Remember that each financial statement gets a heading up here, so I call this Dollars Make Sense Income Statement for the month ended May 31st, 2016. We're going to start by listing our revenues here, and I already went and filled some of this out so that it would just be a little quicker to do. So we are going to list our revenues first. So we have professional fees earned, which over here in our trial balance, our professional fees earned here are right there, $18,300. See if this will copy paste. Okay, 18,300. I'm sorry, whoops, I have that in the wrong place. Put this up here in our professional fees earned. And then we also have interest revenue, which is 4601. I'll go ahead and put that up there. And then we know our total revenues, we're going to move it over to the side, is going to be the addition of those two amounts. You do not have to use Excel. Obviously, you're not doing this problem. I'm doing it on Excel just to make it a little easier, a little neater for you guys to see. We also know that we need a dollar sign on the first number in our column, so both of these are going to get a dollar sign. Okay, and now we're going to come down here and list our expenses. I went ahead and changed the order a little bit and put salaries first, since that was our largest expense. That was $43.60. I would probably put our payroll tax expense next, which was $468.30. And then we have advertising. I think I'm going to go ahead and just copy these down if I can. No, it won't let me do it that way. Okay, that's okay. I'll just enter them. So this is our trial balance over here, and I'm preparing financial statements over here on the right in Excel. So our advertising is $950, insurance expense $200, rent expense $800, utilities $216, interest $41.11, our office supplies $25, data communications expense $100, and bank service charges $15. So that should be all of them. I'm going to go ahead and format these for 2 decimal places. Okay, and I am going to write down here that I'm going to total my expenses. So I'm going to write total expenses. I'll put an underline under that 15, and then I will go ahead and sum all of these. Those are our expenses, and the resulting number then is net income. At least in accounting 1 it is. And we will subtract our expenses from our revenues. And so we have net income of $11,170.60. I'm going to put an underline under the 71.75, double underline under the net income, and of course that also needs a dollar sign, as we know, dollar sign. Okay, so, oh, looks like I am missing an expense. I did not put my depreciation expense in here yet, so I'm just gonna insert a line up here, maybe after payroll taxes, and add my depreciation expense. Otherwise, things wouldn't have worked out. Okay, so that changed my net income down here to 9803. I'm just going to check that real quick and make sure that that I have the right number. Okay. All right, so that's it. Okay, so that is our income statement. It's all done. We know that's the first statement that we prepare. And once we have our income statement done, we can then go on to prepare our retained earnings statement. I'm going to copy that heading. We know that we always have to have a heading on every statement. So I'm going to go ahead and copy that down here. And I'm going to change the name to be retained earnings. Again, if you were doing this by hand, you would just be writing that on your paper. So we have retained earnings, beginning balance, or we could say, I'll put it in parentheses, we could say May 1st, 2016, or we could have said April 30th, 2016. They're both the same. Okay, so this is a new company, so that is a 0 at that point, and we're going to give it a dollar sign. Oops. Need a dollar sign. Okay, I'm going to change this. Don't worry about this Excel stuff. I wanted to show a 0. We'll do a little bit of that in accounting too, plus you will take a CIS course here at Cecil College. So we have retained earnings beginning balance. It could have a date in there. You could say retained earnings May 1st, 2016, or retained earnings April 30th, 2016. Either way, it's fine. That's the beginning balance. And we know we are going to add our net income to that. So we go up here and grab our net income. I don't want a dollar sign on that, but I do want one on that. Ooh, I don't want that either. Okay, I'm going to leave this just not to slow us down with the dash, but if I were preparing this, I would really want it to say 0. Okay, so we have our net income added. And we add these two numbers. We add our retained earnings beginning balance to our income. We're going to put an underline under that one. And then we subtract our dividends. Okay, and our dividends they're over here on our trial balance right here, $550. And we should then have retained earnings, May 31st, 2016. And so we're going to subtract our dividends from our subtotal there. We also need a $sign on that number. So we need our underlines and our double underlines, and so that should be the balance of our retained earnings. Oh, let me make this a number. Okay. All right, that looks pretty good. So that should be our retained earnings if we're correct. And so the next thing that we want to do is our balance sheet. So I am actually going to bring that up top here. Okay, what happened there? Dollars make sense. This is our balance sheet, and as we know, our balance sheet is dated as of a particular day. So we're going to call this May 31st, 2016. I'm just going to take a minute here to center that. And we'll have our assets over here. And we're going to start with our current assets and list them. So I'm going to cheat just a little bit and copy them. You can just kind of watch me do it. I'm going to go to my trial balance. And I'm going to copy all of these current assets over here. Okay, well, I'm going to get it anyway. So just take off my borders, and I don't want any shading. Okay. All right. So we have them all listed. The only thing I would do perhaps is add together all of my prepaids and just call it one prepaid number as prepaid expenses. But just in the interest of time, I'm going to go ahead and leave them all in there like that. And I'll just data entry them. Okay, so our cash is $53,265. Let me format these. Our accounts receivable is $47,2130. Office supplies $585. Prepaid insurance $4,600. Prepaid rent $800. Other prepaid $50, $46.01 for interest receivable, and then we have our total current assets. And so I'm going to sum those, add them up. And I also need a $sign on that one, and I will need a $sign on that one as well. Okay, and then we have our, we have our long-term assets, and we are going to list them as well. We have office technology equipment, and we have vehicles, I'm going to abbreviate. So I think what I'll do is just call it technology. And we have vehicles. Okay, so our technology is 22,800, and our vehicles are 28,000. And so if we subtotal that, we have total 50,800 at cost, and so we have to have less accumulated depreciation. I'm abbreviating so it doesn't take up too much space. And our accumulated depreciation was 433.33 plus 933.33, and our net long-term assets then are the 50,800 minus our accumulated depreciation. Remember, that is a contra asset, so we deduct it, and those would be our total long-term assets. And if we add those to the total current assets, we will have total assets. And so we will add the current assets to the long-term assets, and that will be our total assets. We need an underline and a double underline, and we also need a dollar sign. So with any luck, when we get done with the liabilities and the equity, we will have that same amount, $113,500.65. So I'm going to come over here, and I'm going to start listing our liabilities. And we are also going to classify. This is called a classified balance sheet. Why is it classified? It's classified because we're going to list our current assets separately from our long-term assets, and we're going to do the same thing with the liabilities. We're going to have our current liabilities separate from our long-term liabilities. Okay, so we have current liabilities, and we're going to list them as well. I'm just going to come over here and do I want to copy them again? I'll copy them. So we're going to list our liabilities. I'll also bring the amounts over at the same time, and I'll just format it when we get there. That note payable, I think that was long-term. I'd almost have to go back into that first example. Let's just assume for today that it is long-term, and by that I mean that it comes due in greater than a year. I think that's okay to assume for the equipment. I don't think I gave you any time that it was going to be due, so I think that's okay. And that's important too, because I will get to show you how we classify these. Okay, so I don't want any border, and I don't want any shading. Okay. All right, so all right. So there are all of our current liabilities, and just like we did over here, where we totaled our current assets, I'm going to do the same thing over here with our liabilities. Actually, I think, let's see how I did it. Oh, okay. All right, so I'm going to move these back over to be consistent with what I did with the assets. I didn't indent them. So I'm going to indent total current liabilities. I will put an underline. And I'm going to put a $sign up here on this top one. And then I'm going to sum my total liabilities in this column. Okay, so now we have those summed, and let's list our long-term liabilities next. And I made the assumption that that notes payable is long-term, and that amount was $7,400. And actually, since it's the only one we have, I can go ahead and put it over here. These. Okay, so we have our total long-term liabilities. So now we can total all of our liabilities. And so our total liabilities are that $28,000 and change of short-term plus $7,400 of long-term, and that's our total liabilities. We needed underline underneath that $7,400. Okay, so those are our total liabilities. And then down here, we are also going to list out our equity. And our equity consists of, first, our common stock, which was, if I look over here, it's $68,200. And then we also have retained earnings. And the retained earnings comes from our retained earnings statement. So I'm going to go over there and grab it. Whoops, that's not what I wanted. There was our retained earnings from our retained earnings statement. So I'm going to go grab that number. And I'm going to subtotal my equity. I'll put a line under that. And now I have a grand total, which is my total liabilities and equity. And I probably could capitalize the first one in each one of those, whatever was consistent. And if we did this right, our assets and our liabilities should equal, and in fact they do. So you have, for a number of times now, seen, just move this over, seen a set of financial statements. There is your income statement over here. This is your income statement in good form. And then we have our next statement is our retained earnings, again in good form. And then we take our assets and liabilities for our balance sheet. This could probably be centered more across there. Okay, and we list our assets first, and we have our total assets, then we list our liabilities. We separate out our current assets from our long-term assets and our current liabilities from our long-term liabilities. And then we add our equity and total the two, our liabilities and our equity. And of course, this is a balance sheet, so these numbers that I'm shading in yellow should always balance to each other. If not, it's not a balance sheet, and in this case we do. All right, so I'm going to stop this now and start a new video for the closing process. So I'll be back with you in a minute.